My name is Raj Pendiala. I'm the one of the co-sponsors. Today's webinar is about how to invest with IRA Solo 401k by Steve Sobaji from Quest Trust. And I'm going to hand
egg noodles with what?
Like me, or actually, I was gonna do maybe some rigatoni.
There you go. Steve, you can go ahead.
All right, are we up?
Yes, you are.
Excellent. All right. Well, good evening, everyone. I want to thank you for attending, and I want to thank the group for giving me the opportunity to speak before you this evening about the way in which you can utilize retirement plans in order to take advantage of investments such as this that you'll be hearing about more and more. My name is Steve Sobaji. I'm an IRA specialist with Quest Trust Company. Quest Trust Company is a self-directed IRA custodian. So we do not sell investments ourselves, but we administer them. We give you the ability to utilize private assets inside your IRA and thereby take advantage of all of the tax advantages that you can derive from an IRA, which potentially includes tax deduction, tax deferral, and potentially even tax-free income, depending on the type of IRA that you use. Now, just to preface this presentation itself, I just want to emphasize that this is purely for educational purposes. And before you engage in any kind of a transaction, it's always recommended that you consult with a tax, legal, and/or investment advisor before entering into an arrangement. Now, the purpose of my presentation is not to necessarily be selling you on anything per se, but rather educating you specifically as to what self-directed IRAs are. And just to preface it even further, there are several companies that do this. So Quest, while we think we're the best, there are other options. Quest is, I'll talk a little bit about us toward the end, but right now, again, I want to just give you the overview. So I'll start by talking about what a self-directed IRA is. And first of all, I want to tell you you can just take the term self-directed out of it altogether. IRAs are IRAs are IRAs. They're the same no matter where you go. The term self-directed is more of a marketing term that's used, and it refers specifically to the fact that you can utilize a private asset as opposed to something that is publicly available, like you would find at a Vanguard or a Fidelity or Charles Schwab. So again, there's no real distinction there between one or the other. Now, IRAs themselves have a number of advantages. First of all, I touched on a little bit of the tax savings that you potentially can have. Again, deductibility, deferral, and again, maybe even tax-free income altogether. Now, through the self-directed IRA, you have the additional ability to obtain greater diversification. You know, we all have seen what the markets have been doing of late. There's been an extreme amount of volatility, but by utilizing a self-directed IRA and putting it toward a type of real estate-backed asset, that is truly going to diversify you much more so than just having a bunch of money spread across the various types of indexes or the various types of traditional investments that are out there. The other thing about the self-directed IRA, remember this, you pick the investment. Quest doesn't sell product. We don't push anything. We don't have a conflict of interest. When you set up a self-directed IRA, you are the one selecting the asset. And so you've done the due diligence. You've done the homework. You are investing in something that you are comfortable with and that you know thoroughly because of the work you've done on it. Now, the last point I like to make about a self-directed IRA is that I think that there's a social investing element that also goes along with that. Now, we've all heard of social investing, And there are varying degrees or definitions as to what it is. One of the big things maybe that, goes along with it is, a company that's trying to reduce its carbon footprint or something to that extent. However, I think with the self-directed IRA, you are doing some social investing, but you're doing it in a more impactful way that you can actually see the results because it's always more localized. So take this project, for example. They're going in and taking something that, was perhaps a little rundown or a little old, a little dated. The intent is to go in and revitalize it. That is going to improve the community in many, many ways. Same would be true again if you were renovating a home or something to that effect, or even lending money to somebody who's going to go out and do that. So the way I think about it, the self-directed IRA, it has that social element. It's injecting money into the economy. It's putting people to work, but you will see the benefits much more clearly. Now, there are several types of accounts that we offer through Quest and that you can buy as self-directed investments. Now, we're probably most familiar with the personal types of IRAs, that being the traditional and that being the Roth. Traditionals are also typically funded with a lot in the way of rollover dollars from retirement plans where everything was pre-tax. And the Roth, we know we can put in after-tax money and we have the potential to get that money back tax-free in retirement. Now, there are also employer plans. These are a little different. The SEP Simple and the Solo 401k. These are business-oriented plans. And one of the nice things about them is they will allow you to make significantly higher contributions than you could in the personal IRAs. And because they are oriented around your business, they may offer tax benefits to your business as well. Finally, we do have some of the other items that we call specialty plans. These are health savings accounts and education savings accounts. Now, as the name implies, they are oriented toward very specific goals. The nice thing about these is you can invest in them. They have that tax deferral status. And if the money comes out for the specified purposes, qualified health expenses or qualified education expenses, the distributions are tax-free. So we have a variety of different things oriented toward a variety of different goals. Now, I do want to just go over a couple of rules that do govern self-directed IRAs, because there are many rules to know, and you do want to be very well aware of them, because by nature of them, maybe it's not going to be the right tool for you to use. But the thing about these rules is that they're pretty clear and they're very easy to avoid. Now, first of all, when you are using your IRA, there are certain people that you cannot transact with. And it's primarily lineal ascending and descending relationships and their spouses, but it would incorporate any kind of entity like an LLC or a trust that you or any of those individuals might operate or manage or be compensated by. And again, the intent of that in the eyes of the IRS is to avoid self-dealing or things of that nature. The transaction restrictions, again, go into the self-dealing. You cannot buy, trade, sell, lend money to yourself. It's said that you cannot provide yourself a service. And then there are certain investment restrictions. And basically, the only two things you cannot use inside of an IRA is life insurance and collectibles. And collectibles is defined as something like a piece of artwork or an antique of some kind, something where you can't truly say this is what it's worth, this year, next year, and so on. Now, the one nice thing too, in the context of what we're discussing and the investment opportunity that you're evaluating and using it through a self-directed IRA, is that I wouldn't envision that any of these things would be potential risks in terms of your using the self-directed IRA. Now, in terms of what you can use, Again, that's a very wide swath of potential assets. So I kind of touched on it. And here at Quest, again, our niche is in the real estate area. And real estate has a pretty broad definition. It could be a piece of property. It could be a fix and flip. It could be a rental. It could be a private entity along the lines of what this group is talking to you about. The private entity could be in the form of an LLC, a joint venture, a limited partnership. Again, a trust would be an example. And then private lending is another area of utilization for a self-directed IRA. That's where you get to be kind of the bank. You can say, negotiate terms with an individual. You get to set all the terms in terms of interest rate, loan payment type, collateral. I've seen some very unique things done with our clients when it comes to the promissory notes and that personal lending. Now, in terms of the process, it's a very straightforward process in terms of utilizing a self-directed IRA. The first step, of course, would be opening an account. The second step would be funding the account. And the typical funding methods would be transferring an existing IRA from another custodian, or perhaps rolling over an old 401k plan that was just kind of left behind. Or contributions can also be made. And again, remember, contributions, if they're coming from, say, one of those SEP plans or something to that effect, can be a significant amount of money. So the third step then becomes choose your investment. And again, you're evaluating an opportunity here, which could be exactly that investment that you're looking to utilize within the self-directed IRA. Once that's done, then you tell us what to buy. You're going to work with a specialist here at Quest who's going to provide you the guidance on that transaction. And then finally, the transaction is executed, and now you have an asset that's in your IRA, taking advantage of those various tax benefits. Now, again, I've been trying to keep this very neutral. I, again, don't want this to seem like too much of a sales pitch, but I do want to just talk to you a little bit about who we are at Quest and, kind of what we do. And frankly, I think some of the things that maybe distinguish us a little bit in the self-directed IRA field. First of all, we are the largest self-directed IRA custodian in the state of Texas. However, we have a nationwide clientele of over 20,000 investors. Quest itself has over 100 employees and is continuing to grow. And many of our employees, about a third of our staff, carry what's called a certified IRA specialist designation, which is something that's awarded by the American Banking Association. It shows a deeper knowledge of IRAs. And these people with these designations are spread across our organization. They're not just in marketing or in sales, they're also in the operations. Many of them are in the higher levels, so that that information is spread across our company. And personal note, just keep me in your thoughts because I sat for the exam just about a week ago, so I'm waiting on the results, but with any luck, it'll at least be 35 that we have very soon. Now, the other thing with us, we do have in excess of $2 billion under administration right now that we oversee in our self-directed IRA accounts. And at this point, we even have people that are looking to invest. We have clients who at this point are also evaluating opportunities and are sitting on significant amounts of money just waiting for their next deal to come. All right, so just to quickly wrap up, I want to give you my contact information. The QR code that you see on the screen, if you utilize that, it actually takes you to my personal schedule during my business hours here in my office. You can utilize that and you can access it, find a time that's convenient for you and schedule a consultation, and I'll give you a call at that time. 30 minutes, I can walk you through the entire process. Of course, if you have questions, you can always come to our website. You can enter questions in the chat box if you'd like to do it that way first. We're always available with a phone call. The number 281-492-3434. My extension is 3554 to reach me. Now, the thing about Quest and what makes this, again, a little unique is that during business hours, you always talk to a person. Okay, so somebody is going to answer that phone. It's not push 1, push 2, dial the extension. You know, somebody will pick up the phone. They will tell you if I'm available. They will try to connect the call with me. If I'm not there, again, they'll get a message to me and I'll get back to you immediately. But again, that's part of the personal contact that you get with Quest. And finally, of course, my email is here. You certainly can reach out to me by email if that's your preferred method. But again, I would certainly welcome the opportunity to talk with you further to see if the self-directed IRA might be a good way for you to go to take advantage of a great investment opportunity, such as the one that you're learning about here with this group. All right, well, that's all I have. So I want to thank you guys for your attention, and let's see if we've got questions, or let's go on to the next part of the presentation with you, Raj.
Yep. All right, I'll start sharing my screen. I think I already started. Give me a minute. I'm going to quickly move to the slideshow. Sorry. Can you see my screen? All right, so thanks a lot, Steve. That's great information to all of us. So the current opportunity, what we have, and earlier we did a small presentation, is about North Haven Apartments. This is a 344 units, 1975 year built at a Class C in a Class B area right here in Dallas. And it's a great property, and some of the pictures are here. And why you need to invest in this? It's an excellent Northwest Dallas location, close to major transportation and employment hubs, strong occupancy. I know we have planned to do a lot of additional income by converting one of the warehouses there. And the experienced, the reputable property management company is going to be working with us. And now we have a strong sponsorship team. Also, we are offering, we are able to do 100% write-off with the cost segregation and bonus depreciation. And these are some of the pictures outside and inside of the property. And we have an excellent business plan, and also we are improving some of the amenities, and some of the proposed improvements. What we plan to do is a soccer field. You can see the place there, a pergola, barbecue place. Some of the bathrooms will be updated, and also kitchens will be updated. We are going to add the play areas for children and all that. We are also giving some of the opportunities where we are planning to increase the revenue. And what we plan to do is we are planning to do the rebranding the property, and we are asking some of our investors to suggest a great name for this locality, and we are going to have a raffle for that to announce the winner and provide a prize. The location of this property is fantastic, as I said a couple of times. As you know, Dallas is increasing fantastic, and also here in Dallas, everyone is moving at least one person for every minute. It's overall for Texas. The location of this property is fantastic. As I mentioned, is right near it is sandwiched between the DFW International Airport and Lowfield. And also it is opposite. If you see this location, it is right opposite one of the elementary school there. And if you see this location, the Starbucks, and there is a Home Depot over there. And this is the intersection of 635 and 35. What are the investor expectations? Or the projected returns we have is the holding period for this one is 2 to 5 years. Refinance would be after 18 to 36 months. Average annualized return is 22%, and IRR is to 18%, and multiple is 2x. For a projected 75,000 returns, now we plan to provide a cash flow return of 24,375 with a cumulative return with initial capital that would be 157,500. As you know, we have several participation. Currently, as this is a class A2 for on a split of 80-20 for LPGP. The minimum investment is 75,000. And our, as you see, the offering summary currently is on 506B. The purchase price is of 43.8 million, and the occupancy is 98%, and total equity we plan to raise is 19 million at this time. The same thing what I mentioned, the minimum investment is 75,000, and we plan to close somewhere around July 2nd week, and the total rehab cost is 2.5 million. The acquisition timeline is currently we are under capital rise, and we'll be converting the current offering from 506B to 506C, and we'll be closing around July 2nd week. The sponsorship team has great credentials. We're all accredited investors, collectively over 90 years of real estate experience. Total asset value is more than 100 million. This is our information. And again, I want to give this opportunity to give information about Steve. If anyone has not noted earlier, they can scan the code or make a note of this information. Just a quick rundown of the current opportunity, what we have here, and we are here to take any questions about this IRA and the solo 401k opportunity. Also, you can put any questions there and see if you have any questions, we can go ahead and read them over.
Thank you, Raj and Steve. We did receive a couple of questions right at the end of Steve's presentation. So I'm going to read them to you, Steve. The first question is from Matthew. He asked, what happens with depreciation if investing through a solo 401k?
So any kind of tax deferred account, the trade-off that you're making is because you're going to get the deferral of the gain and have no tax consequence on that. The IRS is not going to let you double dip. So you can't take any kind of depreciation against the investment within a solo 401k or a self-directed IRA itself. Does that answer? Hopefully that's.
Matthew, does that work for you? Did you understand? You can unmute yourself or you can put it in the chat.
No, yes, I do. And is that only for a Roth where you don't pay the taxes, or is it for a regular solo 401k as well?
Well, the deferral is across the board, whether it's, again, 401k, Roth, traditional. Now, the difference with the Roth, of course, is that if those are qualified distributions down the road, and qualified meaning that it's been in there for the 5-year holding period and you have attained age 59 and a half, everything you pull out is going to be tax-free.
Thank you, Steve.
You're welcome.
All right. And then this next question came from Ram. He asks, can you use a self-directed IRA to fund a deal you are personally sponsoring, or you are a co-GP?
Good question. And again, that does kind of go back to what I was talking about with some of the things you cannot do. So if you are an active participant in any kind of an entity, the IRS would view that as providing yourself a service and self-dealing probably to an extent as well. So you cannot, again, deal with yourself, your spouse, ascendants, descendants, and their spouses, or any kind of entity that any of them would own, control, operate, or be highly compensated by. Now, the big difference with that scenario versus the scenario you're evaluating here is that you're going to truly be a passive investor in this. So documents, again, I can't offer tax, legal, or investment advice in any way, shape, or form. But if you are going to invest in a project, basically those documents cannot specify that you have any kind of management or control of the project that you would be investing in.
So Ram, are you clear on that answer?
Yeah, thank you. That's very helpful. I knew it was 1 degree or 2 degrees. I didn't know if it was individual as well. Appreciate the answer.
Sure.
Okay, great. We do have another question that just came in. It says, even though I use either tax deferred, even though I use a tax deferred account in this investment, meaning inside the North Haven investment, can I still use depreciation on my other passive losses from previous investments? Not sure.
Yeah, I'm not exactly sure kind of what that, how that would work or what that exactly means. I guess, the best answer I can just tell you is if it's an IRA, you're not going to be able to use depreciation. Again, there's a little bit of an exception to that, but that's a road I don't really want to go down at this point in time. It has to do with a very specific scenario. With using self-directed IRAs, it really shows itself more when you're actually buying a piece of property itself. But again, if that's something, if I can clarify that, maybe perhaps set up a consultation and I can kind of take you through some of those things.
So Steve, for people who are interested in signing up to, get an IRA, a self-directed IRA, or move their 401k, et cetera, is there a fee for them to contact you and have a consultation?
Absolutely not. Any consultation with an IRA specialist at Quest Trust Company is always free of charge. We want to have those conversations on the front end because, as I mentioned before, the self-directed IRA may not be the right place for you to utilize it. Again, based on maybe some of the rules we've talked about. Again, it's a great option because of all the advantages that it has, but there's not going to be any kind of fee just to talk to us. One thing that I insist on going over with any potential client is, of course, the fee schedule itself. I want to show how that's broken down and where you might see fees. And one thing I always like to point out is that there are ways to navigate the fees so that they are most effective and most efficient for you, and you're not overpaying for any kind of a service. So that's always going to be a part of the conversation or the consultation that I have with anybody. And speaking of the fees, I do want to just make one announcement with respect to them. Quest Trust Company usually does have a typical $100 account opening fee. I have been authorized with this group, if you open up your self-directed IRA before the end of the month, which I believe is next Thursday, we will waive the $100 account opening fee. But one thing, again, there's never any kind of fee that's associated with money coming in. Again, the fee schedule, I think is, it's half a page. It's very transparent. And again, I always invite that conversation.
Okay, thanks, Steve. So Mike did receive some other questions.
Yep.
And so we'll go to Mike and then we'll come back to Ram. He has one more question after Mike.
Okay, great.
Okay, this question, Steve, can you talk about any IRS issues you would run into with the self-directed account of any variety?
I feel like maybe somebody might be trying to get me to speak about a couple of things that are unique to self-directed IRAs. So again, I will just specify, I'm not a tax advisor. So, there are things I wouldn't discuss. I think, however, one thing that is worth mentioning, and again, this is kind of on the tax issue that we talked about. Since this came back around, I will address it somewhat. There are certain types of taxes that may apply inside of an IRA, even though it is a tax deferred investment vehicle. Now, that's the case of where the taxes can get offset against other things like depreciation to reduce the tax. If taxes are back in play, the IRS is going to let deductions come back into play. Now, with these types of investments, that risk is not generally associated with it. And that's because of how the entity potentially is going to get managed. So, that kind of implication for an investor in this type of entity. I won't say that it's completely eliminated, but I would say that it is, often I see rather nullified by the time everything gets netted out and earnings are passed back to the account holder. Now, if that should come to pass, of course, I always stress you will want to get competent tax advice with respect to that. And I emphasize the competent portion of that. In my experience, I've seen many times where people have come to me and they've told me that their accountant isn't familiar with some of these things. It is a bit of a specialty. So again, perhaps we can have a conversation and I can explain it in more detail. But again, I would emphasize, with any kind of utilization of the self-directed IRA, make sure your CPA is familiar with the rules, because again, it's handled in a very unique way. Now, other than that, I mean, the only really IRS risks have to do with, again, the prohibited transactions. And, like I said, I mean, something like this, you're a passive investor, so you don't run the risk of working with a disqualified person. They're not going to be investing in those collectibles. This won't kind of fall into that category of where you're self-dealing. So you're not going to face those types of risks in all likelihood with respect to an investment like this. So, you should be, again, I would assume you can usually with these things that people are on very safe ground from the standpoint of IRS involvement.
So would you say that if you just invested in passively hands-off in, say, a real estate investment or a business that you had no involvement in, or any type of precious metals, for example, and any distributions and or capital gain must be returned to the account, for the self-directed account,
That's
and
correct.
then you couldn't touch the money until your required minimum distribution age.
Absolutely correct. Yeah. Everything in a case like this, it begins and ends with the IRA. So it's money that comes from the IRA. Then the asset is held in the IRA. The earnings, though, also come back and again, are all tax deferred. And, again, should there be a capital gain associated at the end of it, that's not applicable. But the trade-off, again, is that the funds are being saved with that tax deferred status for down the road. So you could not use this as, say, a cash flow entity.
Right. And then there's another question I have. Why don't, like, say, the Schwab's and the other type of brokerage houses offer these type of these type of vehicles?
Mm-hmm, mm-hmm. Honestly, I'm not sure, to be honest with you. It is altogether a different type of business. And, I asked Quincy Long, our founder, about that one time, and, he kind of shrugged it off as well. I mean, he's basically told me, that it just seems like they're content with the type of business that they do. And this would be a rather large investment and undertaking for them to even try to launch. Now, it doesn't mean that it may not happen in the future. If the scalability comes down, or, if the upside on the business is greater, so we may see a day when that happens. There could maybe be a day where, a company like Schwab tries to acquire a custodian and just have the business funnel through there. Hard to say, but it's an interesting point, interesting question. I mean, from our standpoint, I can tell you this, our platform is specifically designed for private assets. We don't carry licensing or anything along those lines. So that's why we are not permitted to deal in the public asset realm.
Very good. And then does Quest provide any type of statements on a monthly or quarterly basis?
We do statements on a quarterly basis, if you like. We do have now a client portal where you can monitor your investments constantly. And with the portal, you actually have the ability to print off a statement, which you can design in terms of the time frame. The client portal that we've developed has really become a turnkey solution for our clients. It has made the investment process easier. It's made a lot of the customer service elements easier. All that being said, one thing I want to emphasize about Quest, going back to the transaction, you know, the transaction is typically going to be initiated by way of our client portal. And the reason is, again, that's eliminated paperwork. That's eliminated a lot of time in terms of getting the investment done. However, with Quest, you do not lose the personal contact. When you initiate an investment in a case like this would fall under our private entities team, like I showed before. You have a specific client service representative from the entities team who's going to work with you on this transaction. You're going to have their name. You're going to be able to communicate with them by way of the portal, or you can pick up the phone and talk to them. But they are going to be your point person, and they are going to take you through the entire transaction, making sure that it's carried out quickly and flawlessly.
And then lastly, is there any regulation with your with this type of custodianship, for example, SIPIC or similar? Is there any regulations that
we're not covered under SIPC or any of those kinds of things that are utilized with other investments? Those things really only account for fraud or issues like that. Again, you're dealing here in a private asset. And so it's not subject to the same kind of regulation that publicly traded assets are. So again, that's why we emphasize that anytime you engage in any kind of a transaction, you thoroughly do your due diligence. And again, it may be worth speaking with a tax, legal, or investment advisor before you engage.
hence the term self-directed then, right?
Exactly.
Okay.
I mean, it
All right,
truly
great.
does give you complete freedom. As opposed to, going to a Fidelity, you buy a Fidelity fund. You're putting your money in, somebody else is really kind of running the show. Here, you run the show.
Ben, do you have any more questions from the attendees?
Yes, I have two more. This one is from Ram. He wants to know, if you roll over into Quest for an investment, are you able to roll over back to your original account if needed after a deal is done? And if so, are the fees similar to the initial rollover?
That's a great question. So the answer is absolutely. If you transfer money in and then you complete your investment and now you want to go back to something else that perhaps Quest doesn't offer, you're always free to do that. That's what's called an IRA transfer, and you can do those in an unlimited amount. They are not even tax reported because in the eyes of the IRS, you're just taking money from one IRA and putting it into another. It's a very common transaction. Now, as to the back end of it, one thing that I always like to point out, especially with respect to the fees, the one fee we do not have is an account closing fee. So you can walk away from Quest if you're not satisfied, or again, if you find some other opportunity. You certainly, no locks on the doors, no bars on the windows. The only thing I would just make mention of is that there are certain banking fees that do apply when money goes out of Quest. That would include funding your investment. It basically boils down to this: how's the money being sent? A wire does carry a $30 fee from Quest. A check is only $5, but if you're able to do it by way of ACH, there's no charge. So again, that's potentially the only thing you might see on the back end.
All right. I think that was a pretty clear answer. And then Matthew has a question. If we were to roll over solo 401k money to a self-directed IRA at Quest, can we open a crypto or stock trading account, or is this just for real estate dealings?
Again, a very good question. So crypto is now something that we do offer on our platform. So that would certainly be available. Again, publicly traded assets like stock, if you're talking about like eBay or something like that, Yahoo, Amazon, whatever your preference is, that's something our platform would not be able to support. However, one thing that we do offer in the realm of stock, and I'm seeing, more and more of this these days, is private companies. A company that's maybe pre-IPO, and maybe, again, it's a private asset, maybe only you or select people have access to buy into that type of investment. But that would be an example of a type of stock that you can do through Quest Trust Company.
All right, great stuff. I see one of the attendees wrote that she did a Quest IRA transaction last year and it was an awesome process. So glad to know we have some people who are already Quest holders.
Excellent.
In the webinar tonight.
Great.
So,
Great.
Mike, did you have any other questions come to you?
No, I that's it for me.
Okay.
Raj, do you want to come back on screen?
Yeah, I'm sorry. There is one question. Is it only going to be accredited only or sophisticated? Okay. I think it is sophisticated is also okay, correct.
So what do you mean by sophisticated, non-accredited, and sophisticated?
I think for the investment, I just, that's the only sentence I have there. So I think if it is, I think coming from Bob, if you can unmute yourself and ask that question, I think should be okay. I think.
Okay, Raj, I was just asking, is this
sure.
investment of yours only for accredited, or is it or sophisticated investors okay to invest in this?
Yes, sophisticated is good.
Okay.
Yeah, so Bob, currently the North Haven Park apartments investment opportunity until June the 30th, we are accepting non-accredited sophisticated investors as well as accredited investors. We're in a 506B portion of our raise, and then we will transition on July 1st to a 506C opportunity, and that will be only accredited investors until we are fully funded and close escrow.
Okay, that was my question.
Yeah.
Thanks, Bob. Thanks, Mike.
Steve, I have another one for you. Does Quest offer any opportunities to get involved in?
We do not. So again, at Quest, we keep ourselves completely neutral. So we do not offer investments. And again, the advantage there is that we're not pushing a product and we don't have conflict of interests. Now, all that being said, again, one of the unique things about Quest Trust Company, and one of the things I think that really distinguish us from other custodians out there, is the education that we offer clients and the networking opportunities that we also offer clients. So we have 3 offices in the state of Texas: Houston, Dallas, Austin. We do live events there where we feature education and networking, and we have many virtual events as well. And one place where people do learn about potential opportunities is through the many, many webinars that we do. So the webinars, again, their purpose is completely to be educational, but they are conducted by people from across the industry in areas of multifamily, lending, again, the housing market itself. Now, they have presentations again, and they're going to educate you on various topics, many of them that are always relevant to people who are using self-directed IRAs. But it's very typical for them to have their contact information at the end of it. And again, the opportunity exists for you to follow up with them if you're interested in what they have to talk about or want to learn more.
Steve, I
you,
got one
Steve.
more question for you. What's the typical turnaround time? And I probably is individualized, but to fund a self-directed account.
Okay, great question. So everything we do at Quest operates on a 24 to 48 hour time frame. So I can have an account open and I can have a transfer initiated in that 24 to 48 hour time period. The only thing we never have control over is how fast the other custodian is going to respond to the request. IRA transfers usually go pretty quickly. And there are companies like Schwab and like Fidelity that are great. They do not drag their feet. You know, we can fax them information. You know, they don't require the original forms. So they, you know, again, make it very easy, I should say. Other companies, sometimes not so much. It's also typical if you're doing a direct rollover out of a 401k, that may take just a little longer as well, just because that tends to have a lot of paperwork that's going back and forth between the plan sponsor and then you, and then back to them, and then they comply with the request. So, you know, again, everything we do is very quick. Now, one thing that I have done with clients, especially if there's a deadline that's looming, is I can open an account and I can initiate a transfer, again, in that very fast, almost 1 day time frame. Once the account's open and an account number is assigned, we can get you registered on the client portal. We can begin the process of collecting all the information that we need in order to direct the investment. That includes the documentation. We can already be reviewing it and get it approved. Then once that funding hits, we can again just pull the trigger right away. So, you know, again, here at Quest, we will, you know, do whatever it takes to make this efficient and make it easy. But again, I've done that with numerous clients, you know, over the last several months, especially because we do recognize that these opportunities can come and go rather quickly.
Are there any other questions out there anybody has?
I don't see any other questions.
Raj, you want to throw up Steve's contact information one last time in case somebody didn't get a chance to write it down or
Yeah,
take a screenshot? So we'll leave this up on the screen briefly. And if you have any questions going forward, you could contact Steve directly with his contact information specific to the self-directed retirement accounts. Or if you have any questions specific to the North Haven Park Apartments investment opportunity that we briefly reviewed, you could contact the co-sponsor who invited you to this webinar directly, or you could email, if you could see on my screen, northavenmf@gmail.com, and we'll get back to you as soon as very quickly.
perfect. Thanks, Dave, Mike, Ben, for all our team. And excellent. And thanks for spending and providing all the guidance for this investment through IRA Solo 401k. And also for the participants, thanks for joining the time.